Is the bubble popping, and what will be the next black swan? What's up, everybody? Welcome aboard. It's Bubba's Bottom Line, and always great to be here with you and share some time. And what's going on, everybody? Well, you know, we've got markets look like the bubble may be losing some air. Maybe the helium balloon after a couple of days is starting to sink a little bit. But I think that this 9-year bubble it may be coming to an end. Of course, last week was some very whippy action, back and forth, up and down, and of course, you know, we're not saying that the markets are going to collapse. Believe me, I never say that. I think that there is a 30 to 40% haircut coming over time. But at the end of the day, we're seeing patterns that suggest that the markets may be running out of steam here. We've seen over the last couple of weeks, we're seeing lower highs, we're seeing lower lows. All of these rip your face off rallies just come short of making another high. So I think when you look at that particular picture, you see reasons to believe that the top is in. We have made our call that the top is in, but just because you call it top does not mean that the markets are going straight down. It just means that for now we think that we're not going to go much higher, and there's a greater likelihood that we go lower. Now there's a lot of things to look at to determine why that is, and number one would be interest rates. All right, interest rates continue to rise. Now, higher rates are going to have an effect on corporate earnings. You know, we've heard in the past, if you remember back a few years ago when the dollar was exploding higher, all the companies would complain, oh, well, the dollar's too high, it hurts our exports, it hurts our sales. So that was the excuse given then. Well, now the new excuse will be, well, interest rates are rising, because remember, many of these companies have borrowed a lot of money on their balance sheet because of what the rates were. Well, higher rates are going to affect everybody. This is one of the reasons you're seeing a total manipulation and a total, I think, what I would call a joint effort at trying to suppress the U.S. dollar, because the U.S. dollar is a reason that we might see markets where interest rates not have as great of effect. You know, we've had rates climb. Now, with the 10-year notes trading at 2.91 and the 30 years trading at 3.21, we have not seen what you might have expected as the dramatic effect out of the stock market. Why is that? Because you're having the artificial manipulation of central banks and the Federal Reserve, central banks around the globe. It's right now in everybody's best interest to keep the rates in the United States lower, because of the lending and how it works, you're getting, if you're using, for example, the euro currency to borrow money from U.S. banks, which we do a lot of global lending, and when we're here, you know, for us, a dollar's a dollar, your rate's your rate, and that's it. There's no currency trade. But when you're taking the currency trade, if my dollar's at 88 cents and the euro currency is at $1.23, I'm getting a 25% discount on my lending when I'm borrowing money. So that's the reason that you have the Fed and central banks around the globe trying to suppress the US dollar, trying to keep rates, that helps them artificially keep rates down, okay? But that will not help. As we've seen in every instance in history, the Federal Reserve has failed at their attempt to manipulate, and their outcomes are always the same, a disaster. And that's why you will see at some point there will be another disaster for just those very reasons. But if we look ahead, okay, we've got retail sales have been brutal. And so after the great excitement that we had after the Christmas season, now we're seeing that retail sales in U.S., in Canada, in the U.K., in Germany, in Australia, some pretty big markets, they're brutal, which only means that there's more people going out of business. Now, I know we'll look back at last week's market action and see that we had some ups and down days, but what did I say to you? We continue to see lower highs. That is not a bullish sign. So the rip your face off rallies, which we've described many times right here on this show, are really meaningless. The rip your face off rallies are certainly just that. They are a rip your face off rally at that time, but at the end, they don't really mean a lot. because they always fail to take out the next high. So that is a sign that the top is in, just based on the overall volatility that we're seeing in the overall market. This wild volatility starts to give you and tell you that that's really just a dead cat bounce, and it's an opportunity to sell. And I think until further notice, we're looking to sell into these big dead cat bounces or these rip your face off rallies. That's really something to take note of, because again, you can see it in the tape of the market that they're heading lower. Many of the stocks that are more stocks are making new lows and new highs. We're seeing the tape does not look as healthy as it once did. I believe that 3 stocks are responsible for the gains this year. So again, you've got a lot of things that we're seeing that just don't make a heck of a lot of sense. And if you look back at not only the Dow, but if you look back, all of a sudden we're starting to see the grain markets perk up a little bit. Now we've been on this story for months, looking for opportunities to buy grains, because we figured they were a great investment, and it looks like they are. Now, the more that we see money come out of equities, I think the more you're going to see to go in the grains. I think those are really a tremendous buying opportunity. I'd like to see a little bit of a dip first, because they've had a nice move already. But again, those are opportunities that we're constantly looking for to put ourselves in a great, solid investment. I think that's something that you should always try to look for as you go through these, is to put yourself in that position, trying to find where the money is going to go, where the best space is going. Of course, if the equities sell off, I think money will flow into the grain markets, because that's a great alternative investment. I think we've seen cattle and hogs do kind of what we thought they would do. Hogs kind of found the bottom and have now started to rally. Cattle is looking to find a bottom in which it can rally off of, but it looks like it wants to sell off first. But I think what you're seeing here is the big story I think you should be being told is that the dollar against the commodities, typically a weaker dollar would mean higher commodity prices, but we're not really seeing that. Okay, we haven't had the big benefit. You know, if you look at just gold versus the dollar, I mean, gold looks, you know, longer term we're very bullish gold, but gold looks in this level like it wants to come down a little bit more. It's had trouble trying to break out of that 1365 level, looking like it wants to work its way lower. And I think that's something that we have to, you know, focus on, because if it's not reacting well to a weaker dollar, then maybe there's a problem that's underneath the surface. And I think there's a lot of problems underneath this surface. But at the end, the commodities have not reacted, which goes back to showing you that the central banks around the globe are helping manipulate and keep pressure on the dollar. I think that you've got a lot of things, which my commentary today will be about the Fed speak, so we won't get into a lot of it during the show. But we just saw, okay, a couple of numbers. Now I'm not a big numbers guy. I hate the numbers, and I'm talking about report numbers. The reports are all bogus as far as I'm concerned. You don't get the straight story, and most of the time numbers are revised one way or the other. So what good are they? What good do they do when they continue to see revisions all the time? And that, I think, is just another story and another problem that we choose to hide under the covers. Because, you know, if you look from the Philly Fed to the Atlanta Fed, I mean, Atlanta Fed 5.3% growth they were calling for. I guess they made a mistake. They took an eraser and then went to change it. But all of them, none of them give you truly accurate information. And then, of course, you get the regular reports that come out that continue to get revised. And then, of course, there's the USDA, which is another bogus group of ridiculous numbers that don't mean anything. And I think one of the problems is that we as investors, we as people that have been involved, are so used to doing it. That's the way we've always done, so we're waiting for the numbers. But there's no longer that need to have to wait for those numbers, because now, with all the release of information on a daily basis, the big banks, the big commercials, Goldman Sachs, JP Morgan, say those guys are already pricing in those numbers well ahead of time. You don't think they're not paying millions of dollars to have somebody on staff to kind of compute and put that into the formula that everybody else uses? I mean, again, we should not believe that this is all random, all right? We should not believe that they always have the inside track. And speaking of the inside track, one of the other things we get is ridiculous, moronic calls from places like Citigroup that make these big calls that, yeah, could oil go to $100? It could, But don't you think it has to go through 65, 66, 70 first? I mean, these big macro calls are nothing more than a tactic to get somebody to react on it. So if I tell you that gold is going to 65, you're not going to be in such a hurry to buy in. But if I tell you it's going to 100, you might say, hey, I buy it at 63. I'm going to jump right in here and buy it up. Again, the spoofing that goes on throughout the banking system and throughout the investing world is never going to change. This is going on, and everybody does it. I mean, you do it yourself. If you're selling your house, you're not going to tell some of your house is a piece of garbage. You're going to give them every reason to bid it up, and that's part of the market system. I have no problem with that. What I have a problem with is that when people that are supposed to be of respect are making calls that they're probably actually fading and going the other way, that becomes a problem to me. But I wonder about the labor market. We have a jobs number coming up Friday, and we hear that people want to talk about how good the labor market is, and I go, is it really that good? And if I go back and say 20 years, I don't know how many people are actually making more real money over the last 20 years. I would say not many. Again, it doesn't mean that you're not getting wealthier. It just means that the overall spending power that you have is not as good as it was 20 years ago. And I would argue to go back 50 years and say that we're nowhere near the spending power that we once had. I go back and remember a time when, women and men, you had obviously a little bit sexist, but I'm not trying to be sexist, but, women didn't have to work unless they wanted to. All right? Families were families, and you had a system there where there was enough money made that you didn't have to have two parties working. I think that's a better way to put it. Two people didn't have to work to support a family. Now it's a rarity that two people don't have to work. It's not that they all want to work, that they have to work because, again, the cost, the lack of inflation, or the so-called lack of inflation, is continuing to push prices higher, but yet our wages don't go higher. And that becomes an issue, okay? When we don't get the higher wages, even though they're telling us they're higher wages, I don't see the spending power. I don't see it myself, and I think that's something that's an issue that I'm going to look at, and we're going to talk about more about that when we come back from the break. This is Bubba's Bottom Line, and I am Todd Bubba Horwitz, and of course, I want to remind you about our high school investing program. We try to educate our youth in America, and we're trying to get into every high school in the country. We give away the program for free. You can check out highschoolinvesting.com. If you'd like to help out and share some of the burden with me, I've been paying for it myself for 7 years. You can go to patreon.com/Bubba Trading. Again, that's patreon.com/Bubba Trading. If you do, excuse me, I will give you one free week of my advisory service, my futures advisory. You can check it out. In the meantime, don't forget to get the Bubba Show every day at 4 to 5 Eastern at libertytalk.fm. That's the Bubba Show at libertytalk.fm. And now back to the program. Welcome back to Bubba's Bottom Line. And there's been a lot of things going on, and of course, obviously, there's a lot of things that are very disappointing to me. And I think that one of the biggest disappointments is the continuation of people trying to convince us that this time is different. When you see a market that's actually falling apart right before your very eyes, but we continue to get this time is different venue. I'm saddened by the retail sales. I'm saddened by a lot of things that are going on because, again, we're only leading ourselves into this gigantic debt bomb that nobody ever wants to talk about. Now, margin debts are at record highs. Right? Margin debts are people buying stock with money they don't have to buy stocks they can't afford, and there will be something that will create the overall meltdown as one of the events. The black swan we talked about on the opening, okay? And I'm going to get more into this in my commentary, but the black swan is one of the things is going to be debt. Now, who has the biggest control of that? That is the Federal Reserve. So stay tuned for my commentary and you'll get what I'm really thinking about that. But when you look at the overall picture, you've got people don't have any capital, free capital, which is going to be a problem. You've got auto loans, 75% of auto loans are underwater, which means that the debt owed is worth more than the car owned. Right? Student loans have no equity value. Okay, so we've got all of this debt out there that's got to be accounted for. And you cannot continue to try to push it off in time, because these are assets that are going to have to be covered. Now, this is the one thing about the housing market bubble that shouldn't have been as bad as it was, because the housing market had hard assets holding it up, which is land. The assets that we're now collateralizing are depreciating assets or have no collateral. So to me, that's a bigger problem. And this debt continues to grow, and not to mention that we are adding $1.5 trillion as well for infrastructure for other things. Now, again, what I really like to see is why can't we see a real general accounting of what's going on in the government? Okay, I don't understand how we can't see what they're doing. Again, it seems almost impossible that we can continue to build this major debt. It seems almost impossible that we can continue to have to print money to try to succeed. So this is a program that doesn't make a lot of sense. You know, why is it that their balance sheet doesn't have to be a balance sheet of normal people? Okay, why can't they have, why do they have to have the ability? Now, I'm not saying that there's an emergency, which is what the Fed was supposed to be done for, was for emergencies. Of course, we know that that's now become, everything's an emergency. But I think that this is an issue that creates the debt, that creates a much bigger problem down the road. And I think this is where we're going to start to see we've talked about it here, another revolution in this country. Now, again, I'm not saying it's a fighting revolution. I just think there's going to be another revolution, whether it be fighting, which I don't think so. It'll be financial. I think that has started when we look at the cryptocurrency world. When you see what's going on in cryptocurrencies and you see the involvement, what do you hear on TV? Everybody says it's the biggest bubble ever. Okay. Now, is it? It might be. All right. And I'm not telling you to take all your money and go to cryptocurrencies, but they're thriving on the fact that people are tired of the central banks. They're tired of centralized banking in general. They're tired of the government taking their money. Okay, that's something that you have to look at. It's a real deal. And you've now got the SEC involved. Now, what the hell does the SEC know about cryptocurrencies? They don't even know how to regulate the stock market. Okay, how did Bernie Madoff get away with things? How did all these other guys get away with things? If they knew what they were doing, we wouldn't have had all these schemes out there. You want to go back and look, Enron, WorldCom, Madoff, Roger on Ramdam, all these guys. So if they really knew anything, it wouldn't be a problem. But that's the real story, okay, is that, again, they don't understand it and they haven't figured out how to get their fair share. It's not like it's JP Morgan. They can find them $5 billion for the whale trade. But the guy probably made 500 of those trades and made billions and billions and billions. They got caught once. Okay, no big deal. But so the crypto space, to me, is a real way at trying to revolt against the central banking system. And I think that we're only in the first or second inning of this. And I do believe that the crypto space is real. I believe it's spectacular, to quote from Seinfeld. No, I mean, again, I was a very late investor. And in fact, probably myself, I'm probably losing money right now in my cryptocurrency plays. But that's not my point. My point is that there's going to be an adoption here of the space because of all the technology. And the question will be, which will be the main currency? Right now there's 2,100 currencies out there. But think about this for a minute. Some of these places some of these new IPOs might come out from ICOs instead, coin offerings. And companies may go directly to the street to, instead of selling stock, sell coins to theirs. So there's a lot of flexibility on the way this goes. And of course, that takes us back into Ripple. All right, Ripple is going to probably knock the SWIFT banking system on their potatoes, because now you can transfer money a lot easier through Ripple. Now, Ripple is more of a centralized type of currency, and the key of this is decentralized. But there's so many things going on that are out there, and you look at housing, the lowest new housing or existing home sales since 1999. You look at all of these factors out there that are creating a tremendous amount of heartburn for the average investor, for the average citizen, and the economy. Remember, the stock market and the economy are not linked and are not related, okay? We can talk about it like it means something, but it really doesn't mean anything. What does mean something is we see that there's pressure on the dollar. Why is there pressure on the dollar? Because the weaker dollar keeps interest rates artificially low. that is something that is going to be, in my opinion, the black swan, and we'll talk more about that in my commentary. But there's a lot of things underneath the surface here that are creating a lot of issues that nobody wants to address. Now, there's different reasons why you wouldn't want to address it, but when you look at the general action and you look at where it's all going, again, it comes back to what? It comes back to massive amounts of debt that cannot be controlled and are not under control. And I think this takes away, and what we've really seen here over the last, I mean more than the last 10 years, but really in the last 9 or 10 years, is you've really seen the free market system and the price discovery model disintegrate. That's another reason I believe in the revolution, and that's another reason that makes the cryptocurrencies so fluid right now, is because they are truly a free market, because they have no interference from a third party. They trade 24 hours a day, 7 days a week, and it's only they're a true price discovery model, where the actual system that we're in right now, we are not in a true free market and price discovery model, because when you control rates, you're controlling everything. You know, everything is related to each other. So when you control one, you're really controlling it all. And I think that is the bigger problem and the bigger story when we look at it, okay, is how it's going to play out from there. In the meantime, I'm going to step out here for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz, and we'll be back after we talk about our high school investing program. And I want to thank a bunch of you out there, and there's Tim and Wisconsin John, and Melanie and Werner from Switzerland, and Rhonda from my security attorney, and Wisconsin John, and Jack, and you know, again, I want to thank all of you for and Trader Jeff, I got to put him in, and thank you all for participating and helping us, trying to continue to educate our youth. And if you'd like to help out, you can go to patreon.com, patreon.com/Bubba Trading. And if you do that, I will give you 1 free week of my advisory service as well. But in the meantime, help us out at patreon.com/Bubba Trading. And also don't forget to get the Bubba Show every single day at 4 o'clock Eastern Time at libertytalk.fm. And let's go back to the show. Welcome back to the Bubba Show. Todd Bubba Horwitz with you. And of course, we've had a big conversation about debt and about everything else, but let's go to the root of all these problems, in my mind, problems. The Federal Reserve. Okay? The Federal Reserve is an organization that was founded in 1913 that, in my opinion, and from some of these conspiracy theories you read, they were there to rip the heart out of the middle class. But we just had, this past week, we just had their minutes, okay? And their minutes came out. Now remember, these minutes were made at the height of the market, okay? Not after the volatility. They were made at the height of the market, okay? And we were near the highs. And all of a sudden, we have this, we're not growing fast enough, or everything's good. Who knows what they say? But what I do know is that their manipulation is going to be, in my opinion, the black swan event. Their suppression of the US dollar, all right, and you can bet your sweet what, that they are suppressing this dollar. They have no more power in the bond market. They have no more power in trying to keep bond prices inflated so they can keep interest rates low. So interest rates have come way up. Okay, 10-year notes, 2.9%, 30s, 3.2. So their last hope is to suppress the US dollar. So in other words, they have to manipulate another product to try to control the price of a third product so that they can continue the lending circle going out, but also at the same time trying to keep rates lower for themselves, which keeps rates lower for corporations. Because look, if you think that the earnings were so great, okay, we never looked at interest rates. Okay, if interest rates normalize, and what is normal, hell if I know, but let's say if they go to 4%, what does that do to profits of all these companies that have borrowed so much money at cheap rates? Okay, their rates go up. What happens to our debt? Okay, because of course we have a lot of debt that we have outstanding, right? So we've got to pay more money. But everybody who's been borrowing and trying to facilitate this free money, this ridiculous system that totally manipulated markets in general, and was only really beneficial to the big corporates, what good does it do you? So the Ponzi scheme, or the legalized Ponzi scheme that is being perpetrated by the Federal Reserve, okay, is starting to collapse. You know, all Ponzi schemes have to come to an end. That's just that's why it's a scheme. If it never ended, you never know, right? I mean, so their model is falling apart, and they're running out of ways to spin it. Right? And you saw the reaction on Wednesday to the market when they came out. Now, you're going to find out, and I think we're going to see in the next few weeks, that this is not very good news. And these low rates staying so low say what? Growth isn't good enough. They want more inflation. All right. Now, as we've seen in past history, we go from no inflation to hyperinflation. We go from low interest rates to spiking rates. Do we think that this time is going to be different here? You have to understand that the Fed model, a model of theory, is broken. When you are unwilling to adjust around your theory, when you're unwilling to change the model which helps you, that just shows you that you have no plan, that you're willing to look into the box, and this is all I'm willing to do, and I'm not willing to do anything else. And I think that is the bigger problem, which is why I believe that the Fed will be the black swan, because they've already destroyed, with their system, their model right now, free markets and price discovery. They've already destructed everything else. So now we get to this area, and the people are rising up. Bitcoin, the cryptocurrency business, is about a $500 billion business now, I believe, on its way to $1 trillion. Now, why is that? That's because people are tired of getting raked over the coals because of what the Federal Reserve does. They've ruined our earnings, they've ruined our pay, they've created all kinds of inflated assets that really aren't inflated, but so that we can pay more taxes. So again, I look for the Fed. I would watch the dollar. As the dollar starts to rise, that will create more beads of sweat on the Federal Reserve. And I think the dollar is going to take off here. I think that that's going to push interest rates higher. That's going to affect earnings. It's going to affect all of the things all the way around. And that will be the overall black swan. So it's not the geopolitical event we're waiting for. It's going to be a money event. And unfortunately, it could have been avoided, but we have a Federal Reserve that refuses to step up and let the stock market fall, raise interest rates where they should be so that they don't get away from them later. But why should this time be different? Every single time, their batting record is 100%. They have never made the right decision when it comes to exiting one of their ridiculous plans that are nothing more than legalized Ponzi schemes. That's it for today. This is Bubba's Bottom Line. Have a great weekend, everybody. Thank you so much for watching. We'll see you next week. Well, we'll see you Monday at Bubba's Daily Update. But have a great week. Have a great weekend. Thank you so much. We'll see you later. Bubba's Bottom Line.